Welcome back everyone to the Audacious Money Witch channel, where we talk about the magic behind the stock market. More and more bulls are becoming bearish. Looking at the AAII investor sentiment votes, there are increasingly more people are flipping to the bearish side for good reasons. Even Jeremy has sold over 2,000 of his Palantir shares.
Ultimately, about 1 in 7 Walgreens stores will shut down as part of this wave. The country's second largest drugstore chain has struggled for years.
Last week, we have Fed liquidity just took a big dive. Maybe Friday's pump could be a dead cat bounce. So why would I want to buy stocks? Well, liquidity in 2025 is still going to be increasing, but it's good to be defensive. So in this video, I am sharing 3 defensive stocks I am buying right now. The first one is Walgreens Boots Alliance, a Jeremy stock.
Ticker symbol on this one is WBA, Walgreens Boots Alliance, all right? Like I said, I bought $800,000 of this stock. And think about how 99% of stocks are at fair value or, overvalued. And here you have a stock trading at a forward P of 8. With one of the safest business models I really view out there, in my personal opinion. I know this business very well. I used to work for Walgreens. I used to be an investor at Walgreens many years ago.
Most cabinets are closed and you have to ring a bell, which is really sad.
Locked up and off limits. Paper goods and potato chips now joining big ticket items behind plexiglass. Nearly everything in the store is restricted, so anyone looking to purchase items must call an employee to open up a case.
What the brown marks were. Turns out shoplifters have tried to burn the cases.
And so the way I'm viewing this stock, WBA, I'm buying about $1 million worth of stock, okay? I'm gonna make $1 million in the stock in my opinion. So if I put $1 million in the stock, I think there's an extremely low probability that that million goes to $500,000 or $750,000 over the next few years.
In an interview with the Wall Street Journal, CEO Tim Wentworth cited high theft locations as a factor in determining which stores would be closing. The problem is anti-theft measures aren't popular, as locking necessities behind glass cases doesn't just deter thieves, but it drives away paying customers.
Why do I think there is over 50% upside for WBA stock? I will explain right after this important message. Audacious Money Witch is on a mission to help you find freedom in life through the magic of the stock market. Thank you for liking and subscribing to Audacious Money Witch.
Healthcare retailer Walgreens Boots Alliance is one of the largest retail pharmacy chain in the United States. Nearly 75% of Americans live within 5 miles of a Walgreens location. The company operates in 3 business segments: U.S. retail pharmacy, international, and U.S. healthcare.
WBA stock was once seen as a safe dividend stock. Those days are long gone.
If I'm going to have to guess, and this is a standalone company in 5 years, WBA is probably anywhere from $75 a share to $125 a share, somewhere in there in 5 years from now. So yeah, WBA, I think it's an easy money stock, and that's why I put 7 figures in the stock.
In just the past 3 years, this beaten down dog stock has lost more than 80% of its value.
This is a huge deal. She failed as a CEO. I don't know how else to put it. The stock was down over 50%. And I mean, I go into these Walgreens stores and it's insane, man. Even in Walgreens stores in not super bad areas, I mean, so much stuff is locked up now.
It has made me feel like the next stock I will be talking about today. And it not only stopped a decades-long streak of increasing its payouts, but also slashed its dividend along the way. The company is in the midst of a turnaround and is considering asset sales and aggressive cost-cutting to try to shore up its business.
She got a big pay package, man. Big pay package. And I got to be honest, I don't know how much she did.
Things have gone from bad to worse.
He went on to say, quote, "We are at the point where the current pharmacy model is not sustainable, and challenges in our operating environment require we approach the market differently," end quote. No wonder the stock was down 22%. You may not know that he's actually one of the finest business people in the world. Someone who turned around Express Scripts and then sold to Cigna for an immense profit for shareholders. He knows this business well. He's identified the edge that Walgreens has for the moment, the pharmacy in the back of the store.
As it struggles to find a way out of its current tailspin, the question many investors who are still still hanging on may be asking is, with that, its yield at more than 10%, could another dividend cut be coming? Walgreens last cut its dividend on January 4, 2024. The 48% reduction to the payout may have come as a shock to investors who are relying on that recurring income.
The reality, however, was that the dividend was unsustainable, and it was really only a matter of time before the company going to need to do something. The company is set to announce its next quarterly results on January 10th.
Is another dividend cut likely for Walgreens?
An arrest in a shoplifting case in Queens in which the thief used a blowtorch, yes, a blowtorch, to reach items behind lock and key.
Walgreens has been working on cutting costs, and its free cash flow has improved. In 2 of the past 4 quarters, the company has generated positive free cash flow, and for 2 straight quarters, its free cash has been higher than what it has been paying in dividends.
Here's how it works. A criminal network hires an individual or crew called boosters. After robbing a retailer, they turn over the stolen goods to someone waiting nearby called a fence.
Walmart, Walgreens, Macy's are choosing to close stores in problematic areas.
Many shelves are empty, and it's not from the supply chain crisis. It's from shoplifting.
But overall profitability remains a big concern. Walgreens has incurred an operating loss in 3 of the past 4 quarters, and with big question marks surrounding its healthcare strategy. Reducing its store count and being leaner will certainly help, but those moves will also take time. What stood out to me in the press release announcing the 48% dividend cut was that management still wanted to maintain what it considered to be a competitive yield. Today that yield is over 10%, and it could easily be cut in half again and still be considered competitive. So another dividend cut does look like it could be a possibility, as the company's financials still aren't all that strong. If they do decide to cut, the stock price could drop even more.
Walgreens is still too risky for most investors. A company like Walgreens that is in the midst of a turnaround is going to be incredibly risky investment. Unless you are a contrarian investor like me, you'll likely be better off seeking out safer dividend stocks with more modest yields than Walgreens.
The stock does look cheap, trading at just 6 times next year's estimated profits. Its discounted valuation may look tempting, but it comes with significant risks that investors should be careful not to overlook. However, the upside is enormous. If Tim Wentworth can turn this ship around, I mean at the peak. This was close to $100 stock. Right now, it's traded at $9.5 a share. If the turnaround works out, it could be a 10x stock, just going back to retest the high. But let's not get ahead of ourselves. Shares of Walgreens Boots Alliance continue to trade near multi-decade lows, but may be signaling a significant upside move. There is a bull flag on the daily chart that drew my attention. Bull flags signal accumulation from buyers and a reduction of sellers. The end result is usually a strong up move.
In addition, Walgreens Boots Alliance trades at a very attractive forward price to earnings ratio of just 6, with the lowest price to sales ratio I have ever seen at 0.06. This puts it among the lowest in the S&P 500. Not to mention, there's a significant amount of insider buying at much higher prices. I'm talking about over 100% of today's price.
To add additional intrigue, there was a strong rumor in mid-December 2024 that a major player was looking to take Walgreens private. This means a buyout at a strong premium to the current stock price. Technical analysis signals upside to $15.65, a major gap fill. This would be a gain in the stock price of 64%. Overall, from a risk-reward scenario, Walgreens looks like a solid setup for a swing trade and a deep value investment. The second stock I am buying is Honest stock. Honest business, as it appears the company may be on the cusp of a considerable accomplishment. If you are new, the Honest Company manufactures and sells diapers and wipes, skin and personal care, and household and wellness products. With the latest financial year loss of US $39 million, the $695 million market cap company alleviated its loss by moving closer towards its target of break even. Many investors are wondering about the rate at which Honest Company will turn a profit, with the big question being, when will the company break even?
Honest Company is bordering on break-even, according to the 8 American personal product analysts. They expect the company to post a final loss in 2024 before turning a profit of $2.5 million in 2025. The company is therefore projected to break even just over a year from today.
How fast will the company have to grow each year in order to reach the break-even point by 2025? Working backwards from analyst estimates, it turns out that they expect the company to grow 63% year on year on average, which is rather optimistic. Should the business grow at a slower rate, it will become profitable at a later date than expected. One thing I'd like to point out is that the Honest Company has no debt on its balance sheet, which is quite unusual for a cash-burning growth company, which usually has a high level of debt relative to its equity. The company currently operates purely off its shareholder funding and has no debt obligation, reducing concerns around repayments and making it a less risky investment compared to Walgreens.
Unlike Walgreens, insiders are selling Honest shares. Jessica Alba just sold a large block of Honest stock. She is currently a non-employee director on the company's board, one of the Honest's largest shareholders, with a 6.4% stake as of March 25th.
Alba obtained 465,000 Honest shares from options for $2.4 million, an average price of $5.13 each. On December 10th, she sold an equal number of shares the same day for $3.5 million, an average price of $7.55 each. Alba now owns $1.17 million Honest shares in a personal account, including 60,569 restricted stock units and another 4.3 million shares through a trust that she and her husband control. Honest stock has spiked recently, surging 49% from the company's strong third quarter report on November 12th. With that gain, shares have more than doubled in 2024.
I have a greater confidence in Honest revenue growth initiative with their world-class marketing team leading to sustained profitable growth. This is why I wanted to add more shares of Honest.
The last stock I am buying right now is Northrop Grumman Corporation. Hit the like button if you want me to dive deep into this one. Long story short, I think this defense technology company is traded cheap, considering the cutting-edge technology it's selling to the U.S. military. This type of stock will never go down because, like Warren Buffett said, never bet against America.